Yo, what is good, guys? I hope you all had a fantastic weekend. I just turned 20 today, so very fun weekend for me. But, time to get back to work. I got a lot of stuff to show you. We're going to be looking at some short squeeze data from Goldman Sachs. Previously I've been looking for stopping a little lower, but we broke some big levels, which we're going to talk about. And now we're approaching that high. That high's coming in. It's not very far away, so make sure to watch this whole video. I got some good stuff to show you. With that being said, make sure to show the video some love, give it a like and subscribe, and we're just gonna hop right into it. So, we're just gonna be talking about some stuff that I said over a month ago, and we're gonna see how it's been playing out, how it has played out, and I'm just gonna start off with the data from Goldman Sachs. So, this is the third largest short squeeze, really across the markets in the last 10 years. So, as you can see, you had some massive rallies, especially that COVID squeeze. Everyone was shorting at the bottom, and back in 2014. So here we are right now. We are in a historical squeeze, and this is what we were looking at over a month ago. This is what we were expecting. I mean, it was pretty obvious that it was coming, especially in hindsight, but that's what we're going to look at right now. So, that's just what we're going to start off with. So, yeah, you could be testing these higher moving averages. So, I can see it's getting all the way back up there. 430, 440 even. Hitting those trend lines. So, we're at 365 and I was looking for 430. I was very confident in this squeeze. Now, the violence and velocity of this move has somewhat astonished me because this is going up at an incredible rate. It's obvious you've been in the markets. It's an incredible squeeze. Leaving me speechless here, but third biggest short squeeze in history, in the last 10 years. So I got a lot of technical lines to show you. These are lines that you've seen from really just other people. These are the lines that the market's watching right now. So I really do think we won't get rejected in this area, but the really big area around here is right around here. So this is kind of let me show you the supply and demand here, because the volume that's being traded in this region is a little kind of minimal. So when you have these volume gaps, you tend to see it's very illiquid in these areas. So let me put that up so you can see it, and I can explain a little. So right here, this is the big area I was right here actually. I said let me put it so you can see where I was mentioning it. So this big area right here around 416, just that area, I was like, this is a diamond wall. I don't see us getting through it, and we gapped way above it. So that happened on CPI, I believe, and that was what we expected. So the thing is, though, is that this is still following the thesis. I was looking for that 430, but in the previous videos, I was very confident in that bear case getting rejected at 416, and I guess I was wrong about that. I really just kind of ignored that thesis that I had 2 months ago. So that was a mistake on my part. But the big thing here is I'm going to show you another thing. So again, this was before August. The big thing here was that this was the range I was looking at, 401 to 415, 416, 417, to give it that leeway above 415. With that chance, we can get up to 430. So I started shorting in that region, and we broke that big area, and we went insane. We've been going parabolic, so I've been doing short shares on SPXS, so no theta. It hasn't really been a big problem to hold these shares, although it is doing some damage to this rally, but that's fine with me. I know what's coming next, and I'm patiently waiting. So this week, I really do think this is actually the top. That's very new in these 430s, low 430s. Mid 430s maybe. I'm going to show you the fibs, some Elliott Wave theory with this stuff, so you can really see these targets, and it's all lining up now. Now before, it was a bit questionable that we would stop around 416, especially because the big thing we were watching was that daily momentum. It really never slowed down. There were signs of it slowing down, but it was never really slowing down, and that momentum has just been staying there, and the daily MACD. This is another big thing I want you to keep in mind. So First off, the daily MACD, this is the second time ever in history that the MACD has been this high. Now, it's hard to say that because you can't really compare it with this past data, just because the volume's different, the price action's different, but look at this increase from the volume all the way down to this negative territory. Look at this incline. So this is clearly unsustainable, has to return to that mean reversion, but regardless, you know, it's obvious this is not sustainable, but really the mass, I guess mass sentiment is that the lows are in. Now, that is still definitely not guaranteed. You know, you'll see what I'm talking about. I'm going to show you the Elliott Wave theory and why that's still not. New lows are still very, very possible. And I'm going to say it now. We can see under 300. Yes, we are rallying. We're going crazy right now. But we can see under 300 still. And you know, you can argue with me, say that's crazy. But we were free falling. We were at 365. And I said 430. And look where we are. We are $3 away. So, me saying 200, I would say 290 to 333 is the area I'm looking at if we make those new lows. We have those moving averages around 350, but I can see us still going sub 300. So that's why I'm sitting on the short position. The next big retrace is important, as that's been the point I've been making. So next thing I want to show you is this pulse zone, because really this is, you know, this isn't really a typical thing you see on charts, but you're going to see why it makes sense. Let me clean this up a little. So, pulse zone 2. This, I don't think I've been putting these in my videos lately, but it's been tracking it pretty much on the dot. Now, it's been doing the moves early just because of this extraordinary velocity. The short are getting destroyed right now. And, you know, I had this in one of my videos when we were at somewhere around here. I'm just going to show you it, but we are now at that top range that I've been targeting. So we can give this some leeway. You're going to see with the fibs. Actually, I'll just put that up now so you can see what I'm talking about. But this has to do with Elliott Wave theory. If this is an ABC, you know, we're getting close to this next target, 429. So there's going to be a very big, 430 is a very big area to watch. It's psychological level. It's this area, you know, there's really a lot of it's not very liquid in that area, so it will be hard to find buyers in that range, just because look at how hard we've gone up. We've gone parabolic. You have 8 gaps now, so the bulls, they are in pure euphoria right now. It's been doing nothing but going up, but there's that pulse zone I'm going to show you. This was I would recommend checking out this video. It's a cool one. It has a lot of interesting stuff in it, but this is me mentioning the pulse zone way back here. This is what I'm calling a pulse zone, and it tests that first big resistance, and it goes into the next pulse zone where it's likely to break out because you had this consolidation and everything, and what do you know? You start heading towards that target, that range within the time frame, and the target range. So using speed fans, I could so the big thing here in this picture, you can see we went into that pulse zone. We got a retracement, and it was a very tiny retracement, but I may have mentioned in the video, it was enough for us to move up to the high 420s. Specifically, I said the low to mid 420s. So we are in this range now. We've gone crazy. So unfortunately, I got out early. I turned bearish too soon, and that is on my fault. But you know, this is a crazy short squeeze. So really the big things, I've showed you really the big things here, but we're going to take a look at the fibs so you can see the psychology, the psychological point of the markets, and really what the rest of the market is watching. So you've been watching the same thing, but these are things that you need to really remember and keep in the back of your head. So that wedge breakout, you know, the one I was tracking since all the way back here, we were at the golden pocket. This is another big spot here. So this was that wedge I was looking for, however it's drawn. It was from this low, that low, and then this kind of like messy rough area. You broke out, and look where you are right now. You're at the golden pocket. This is an extremely high probability area for traders to take profits, you know, target gets hit, you've had these 5 ways up, which I'm going to map out really soon, right after this. But you also, at this fib here, really the next big one is coming up, that golden pocket. So this is kind of far away, but you can't leave it out of the picture. Now, we might have some more upside. I'm still bearish. I'm still looking for that massive pullback, because you have too many reasons. You have too many reasons that support that downside, especially the liquidity zones you need to test. You have to test these. You can't just go straight up forever. That's not how it works. So all of these areas, these are called virgin points of control, where you really kind of need to test these areas. You can see you've done it in the past. That's just how it works. You need to test liquidity down here. So that's another big thing that I'm watching. And for the Elliott Wave theory in this channel, I want to show you a couple things. So first off, you're in this very tight channel here, a very tight and very steep channel. So there's a lot of interesting trend lines in here, because obviously there's this wider range, but you have this line that's kind of being respected within the within this upturn. So just look at it yourself. You know, it's an interesting trend, and it's been respecting it on the dot, as well as this Fibonacci channel, which I'm going to put up. So we're going to go onto the logarithmic scale, and this is kind of interesting. So you have this area that I guess the market really kind of wants to go to. It's trending towards it, and that's where you're going right now. So again, lines up with that 430 area, the low 430s, maybe the high 420s, because you know, there's that chance we trap a lot of people. We don't get to where everyone expects us to get to, especially those big trend lines from the all-time high lining up with this point here. So you might not even test that, but we're just gonna have to see how it goes. I am looking for September puts this week. If we get that retrace, we'll just have to track that as we start dropping. Now, I've been saying, once we find the peak of this move, we'll start looking at the downside targets. So for now, we'll just wait until the squeeze is over. We're gonna see how long the bulls can keep this up for. It's incredible to watch. It's historical, but you're getting close to these, all these really kind of targets from all these different aspects. And oh yeah, I forgot the Elliott Wave. So this, you know, originally I had a different count. I believe it was like 1, 2, 3, 4, 5. And I was looking for an extended fifth wave, but you know, there were a lot of reasons that was invalidated, and that wasn't validated. So right now, you have a count like this. We're in this fifth wave here, and you know, this is a messy kind of I guess corrective wave here. It was a bear flag too, and we barely dropped out of it. So incredible strength here. You gapped up after it, and however you want to draw that, but you're just defying this bearish, all the bears that are trying to come in here, trying to time the top, and so far it's not been working. And you know, that's been a mistake on my part, looking for us to get rejected at this area, and you had a lot of trouble in it. You consolidated, and it was enough of a retrace. I believe it was this move right here that was really setting up for that next move, and that's what we got in this fifth wave. And what do you have here? You're getting close to that next target here, where that fifth wave can end. So you have a lot of, you're gonna have a lot of problems around 430. So that's the point I want to stress. 430 is the big level, and I just want to make that point clear. It's obvious, but that's the level area you need to be watching. This is not good risk reward to go long up here. I'm not a financial advisor, but we are nearing the top here, and now I can confidently say this is the count. We are reaching the top here, and regardless if this is the bottom, you need to retrace. So just patience is key right now. Patience is key. You're just waiting for this squeeze to stop. And institutions and the big money has not been buying. I've showed you that data. This is all retail fueling this. Tesla, you know, one of the top holdings in SPY, it is absolutely flying, and that's just the FOMO from retail not wanting to miss out. They think the lows are in, and dumb money, they're called dumb money for a reason. They're all buying right now, so I'm going to stick with what I think. I showed you a lot of things I've really wanted to show you. Golden pockets, the pulse zones, that data, the videos, the ABC fibs. So this is another big thing here. There is that possibility that this is just a correction. Now, I'm not going to spend a lot of time explaining this, but there's a chance this is that extended ABC. Now it's somewhat uncommon to see this big of an extension, but we'll leave it in the picture. Yeah, you're getting close to that target as well. And the problem with this though is that fourth waves cannot really be this big. So if this is 5 waves down, which is a possibility, the fourth wave, this would be the fourth wave here, it cannot retrace past wave 1 and just kind of like stay there. So we've really kind of breached it, and it can also only go to the 50% of that previous wave, which we've blown past now, and it's a tricky area. We're just gonna have to see how it goes. It is very uncommon for fourth waves to be this big of a move here, so we're just gonna have to see how it goes. But so far, that might be the bottom, and that's what we were talking about in the Discord. If you've been in there, me and Cloudy, we were talking about that 365 level all the way back in February and January. We hit it, and we had the thesis that that could be the bottom. 365, the next level would be 540, all the way into the 600s, and then you have that grand cycle, has to do with Elliott Wave theory. That's the end of the 5 waves for the last few decades. So if this isn't the correction, the true correction, you're gonna have one coming up in the next few years. So we're gonna see how this next few weeks go. They're really important for that next macro direction. But another controversial thing people don't really look at, but I find is very relevant, Fibonacci Circles. So there's not really an answer for this, and an answer to why this works, but if it works, why not use it? So this is very interesting. These lines really kind of show you where all of these transitions happen in the direction of price action, and you can see this. You can see where kind of the shifts happen here. Big drops come out of them, big moves up, big drops, big drops. So this is where you can find transitions. And again, I cannot explain to you why this works, but the Fibonacci ratios plays a part in really everything in this universe. So we're getting close to this next zone here where you can see a transition in price action. And the cycles we've been watching, the momentum has been so strong, it's been defying that magnet to the downside. So this move is incredible, it's historical, but it's really been expected since the beginning. I was looking for that 430 level, and here we are. I just we moved up so hard so fast, and I was like, I don't know if we can get there, and we did. And I'm not in denial of that. I'm in the red, but we're going to see how the next few weeks go. So that's really what I'm looking for. I don't really have anything else to show you besides just this other circle here, where you gapped out of this right here, right at the edge of that edge, right at the edge of the circle, you gapped up, and you made that resistance. The top half of this circle is resistance, and the bottom half is support. So we'll see how these fib circles go. We're just going to watch them as they play out, and that's really all I have for SPY. We're coming up to the end of this move here. Not good risk reward, in my opinion. This is not the best area to be considering a long position. So besides that, that's it for SPY. Oil, if you're broken out of this channel, that's something I'm going to be watching. This is that previous low. We shorted from the top here, and we did all those swings. We went short here, short here, short here, I believe, and then we haven't traded this range, so we could be looking for a big move coming up here. And this was also in the Discord if you just want to see it. Or we got to 115, that was the retrace I was looking for. We got to 93, 94, and that's when I stopped trading, just waiting for that confirmation of the next big move. So watching oil, I think it could do a big move soon. So that's all I have for this video. We're going to see how tomorrow goes. The future is currently red, but I think we do have a little more upside, but if not, I'm ready for it. So that's where I'm going to leave this video. Peace out, guys.